2017 was really a mixed bag for New Zealand's equity capital markets. On the one hand, we had extremely strong market performance, with the NZX 50 outperforming major international indices such as the ASX 200 and the S&P 500. Even with the recent volatility, the NZX 50 has seemed to weather the storm much better than other international indices. We also saw booming levels of secondary equity capital raising in New Zealand in 2017, with $3.1 billion of secondary equity capital raised. On the other hand, however, as we predicted in 2016, we saw the NZX main board shrink in terms of the number of listed issuers for the second consecutive year. This continued contraction in the size of the NZX main board was a result of both a high number of delistings. We had 8 issuers leave the NZX main board in 2017, which was only offset by 1 IPO, the worst performance in terms of IPO numbers since the halcyon years of 2013 and 2014. 2018 has already seen Opus and Flyway delist from the NZX main board, and Xero has controversially decamped to an ASX-only listing. Trilogy has also announced a scheme of arrangement which, if approved by shareholders, will also see it delist later this year. So we're picking that this level of takeover activity is going to continue and is going to be the core contributor to a continued shrinking in the size of the NZX main board. One source of new listings which NZX has signalled it's keen to explore is overseas listed issuers, and this could help contribute to increasing the size and scale of the NZX main board. The ASX has had considerable success with this secondary listing category, known as a foreign exempt listing in Australia. What it would mean is that companies that have a presence in New Zealand but are listed on an offshore exchange are able to obtain a secondary listing here on the NZX for no additional compliance burden and a modest cost. We're excited about NZX's new strategic initiatives that it's announced to the market. It's indicated that it's prepared to tackle some of the tough issues which are facing our capital markets in New Zealand, such as on-market liquidity and transparency of trading. We're also pleased to see that NZX has listened to feedback from the investment community about the structure of the equity boards, signalling its intention to consolidate the NZAX and the NXT market into a single NZX main board. Another positive that we think that NZX's strategic review could contribute to capital markets is in product innovation. NZX has signalled its intention to develop a tailored set of rules for managed investment schemes, which should hopefully contribute to new listings in 2019 and beyond.